Hey, Ryan Wheless here. Welcome back to the Allied Wealth on the Money YouTube channel. If you like the content we're putting out, please give us a like down below and hit the subscribe button. Today I want to talk to you about something we call the stealth tax. And the stealth tax is based on something called IRMAA, which is income-related modified adjusted amount. And that's based on Medicare, folks. And I don't care how poor you are or how rich you are in this country, Medicare impacts everyone. So the following things can trigger your Medicare to go up, right? And cost you more for the same service or same coverage your neighbor's paying less for. So you could retire mid-year, have a lot of income, that can trigger IRMAA. All right, you can have retiring overseas income, have a big year and retire middle of the year, that can trigger IRMAA. Exercising options or restricted stock in a year can trigger IRMAA. A net unrealized appreciation transaction can also trigger IRMAA, which is interesting because we're trying to save money on taxes by doing it anyway, yet we cause ourselves to pay more in Medicare, right? Medicare surcharges, folks, it's a tax. We can also have the sale of highly appreciated stock can trigger IRMAA, and we can also have muni bond interest. Well, wait a minute, Ryan. I thought muni bond interest is supposed to be tax-free. How's it causing me to pay more in Medicare premiums and surcharges, right? But guess what, folks? Muni bonds are tax efficient. They're not totally tax-free in retirement. Remember that. Also, the sale of a home. If you sell a appreciated piece of property, that can trigger IRMAA as well. And any event adding additional income in your retirement years can also trigger IRMAA. So what is it and kind of how does it work? Well, these are the Medicare prices here on the screen. And we go down here to the very bottom. You can see that if you're a married couple and your modified adjusted gross income, including tax-free municipal bond interest, by the way, is $750,000 or more, you're going to pay $578 a year in Medicare Part B premiums, okay? And your prescription drugs will be another $77. So if you add those dollars up, multiply that for a married couple times 2, that means you're paying $15,748 that year for Medicare and your prescription drug premiums. Folks, that's ridiculous considering your neighbor might be next door paying about $170 a month. So you got to watch this stuff, folks. This is what we call the stealth tax. It's super important to know this stuff. And if you're someone who is looking at facing IRMAA or getting hit with a surcharge, it's important to know you're that person. But if you are, I've got a solution for you. File yourself a SS-44 form that really will combat most of the things that will trigger IRMAA, and you can file that form with your taxes, and that can help you mitigate your future Medicare surcharges in the future and not go through those increased expenses. But so many people don't even know about the SS-44 form, folks, so be sure you do.